let's get into this. Let's get into this.
9.2.
Yeah, we're on 9.2. We're doing exercise 9.2. Why isn't it recording? Okay, there we go. All right. Cool. So let's just.
Oh, okay. So we're taking these T accounts and putting them into
The general ledger. I just want to collapse this here. And I want to zoom in a little bit more. Okay. So maybe one thing that I should have probably done with you guys first is goodness. Right. Why?
you don't have to do
Okay. Here we go. Here. It's acting slow. Okay. All right. So whilst it gets itself together, let's read the question and see what's happening over there. Okay. So 9.2, question 9.2. Before any entry can be made in the general ledger, transactions must first enter into subsidiary journals. All right, we know this. Everything starts with a transaction, source document, then the journal. Okay. Closing transfers are always entered into the general journal. Okay. Refer back to example 9.1 above. How do you think the closing transfers would have been journalized in the general journal, all right, of Tuscany dealers? Demonstrate. So that's point one. All right, that's where we're starting. After the closing entries have been done, the bookkeeper can draw up post-closing trial balance. What do you think the post-closing trial balance of Tuscany dealers would have looked like on 28 February 2008? Try to construct this post-closing trial balance. We have seen that the balances of the nominal account section all become zero when doing the closing transfers at year end. Why do you think it is necessary for these balances to become nil? Okay, so we spoke to this when we went over the slides. We want them to become nil because we want to start afresh, all right? And we obviously want to assess what was our performance for the year. Okay, so I think I want to show you guys this one more time, and I want you to take pictures of this before we actually begin. I want to show you my slides again, just the last two, and then I want you to take pictures of this, and then I want, as we go through this exercise together, I want us to obviously be looking at the what you call it, um, at the process. Okay, trust me. When you guys are done, you'll see that. Okay, so you'll see how easy this is. So just take a picture of this quickly. Okay, and I want you guys to make this your own. You can even share it on the WhatsApp group. So I want you to make this your own. What do I mean by that? You might change it so that it speaks to you, right, in your own shorthand notes. Because in the exam or test, you obviously won't have this. This should be in your head by that time. I need you to take a picture of this one as well.
Is there a answer series of these books that we can buy?
Sorry, say that again.
An answer series for these things. Practice them or the answers come out.
The answers should be in the back of your textbook. before the,
Yeah, exactly.
yes.
I was wondering where I got all the stuff from all the previous questions. I was so confused.
All right, so step one, remember, is to close off sales returns to the sales account, okay? So you could actually go into this example 9.1 and you look for your sales returns on the first, yes, this first page, and the total there is 16,000. So you can see there you've got a debit balance, because sales returns is an expense, okay? It reduces our income. So now that we're closing it off, we say to ourselves, okay, since it's got a debit balance, we know we need to put in a credit entry, all right? So here we're going to say, okay, sales.
No, it's slow.
Yeah, it's bad. I think it's actually slow because it is actually, because at least on my screen, it's a reflection of what's happening over here. Okay, anyway, and then we need to, obviously plug in the amount there on the credit side, which is 1,000. Oh my word, this is going to be a problem. Let me try and close everything else. Maybe that will help. What other things do I have running? Everything else that I have running, hopefully it will speed things up a little here. Yeah, I need the projector. I do actually. Okay, that should help. Okay. Right, so we said we want to plug in that 16,000 over here on the credit side. Okay. Then we know that here we need to have our sales returns, or sorry, sales. Yes, you're correct, sales. And that we are going to debit. Okay.
Now, is that amount the 832,000?
We are still getting there. We haven't yet gotten to,
Oh, okay.
yeah, because remember step number one is just closing our sales returns to the sales account.
Okay.
Yeah.
Why is it that in this, in the textbook it says that they took the sales returns on the debit side of sales, and they have the trading account, and then they added those two to get the total. But didn't sales
Sorry,
returns taken away from it?
Where you?
So
yes.
the sales account.
Yeah.
Why does it have the sales returns and then they add it with the trading account? Because surely that takes away from the trading account.
So they're not actually adding. So what's happening here is, isn't this reducing your sales? So this is your sales. This is the balance on your sales. Okay? Forget about that for a second.
Okay.
This is our balance on sales for the year. Okay? Then what we're saying is, oh, okay, but you need to also close up sales returns.
Oh,
And that has then reduced your sales. Remember, we're closing off, yes, to the sales return. I mean, to the trading account. Okay, right. But this is why I start in the journal first, because it's going to, everything we've done here is then going to get posted to that.
Okay.
Does it make sense? So they're actually showing you what was posted from the general journal to the general ledger. Makes sense? Okay, but anyway, let's move to the next step. The next step is then we're closing off sales to the trading account. Now, we know that sales all along is an income, so we've been crediting it, crediting it, crediting it. So now we need to debit. Okay, so here we're going to say sales. All right, but now we also need to calculate how much are we actually posting to the, what's it called? The trading account.
So is that the difference between the sales and the sales return?
Exactly.
So then it would be the...
So what is the 832? No, I don't want that. I want us to actually calculate it first.
Okay, so the total balance for sales
Mm-hmm.
is 848,000.
848,000.
And then it's the 16,000 for the return.
And then minus 16. Okay, and then we close brackets there. All right. And we said that brings us to a total of 832, right?
Yes.
Okay. So here, if your dead click is sorry, it's already over. Okay. All right. Then here, trading account. And can you see there under the narration, it's just closing transfer. That's all you need to put in. And here under the creditor side, we're going to put that same amount of 832,000. Okay. So you see we've already dealt with the first two steps. Okay.
Is the trading account treated as an asset? Because I know it's a temporary, but how does it
it's more treated like, I would rather say it's treated like an income and expense account.
So
because
increasing on the
credit side, decreasing on the debit side. Remember, we're using it to calculate gross profit, which is an income, right? Assuming we actually made a gross profit, because we could make a gross loss, right? Then now, after that, what's the next step according to your process?
The trading account and cost of sales.
So now it's cost of sales to the trading income. Okay. So we know cost of sales is an expense. So the whole year we've been debiting. So now we need to credit this account to close it off. Okay. So here I'm going to just put COS, and the total on cost of sales is how much?
520,000.
Okay. 520,000. Okay. And then we know that that's getting closed off to the trading account. So we're going to debit trading account.
How do they ask this question instead of giving us the general ledger?
That's the thing. And this is what I wanted. I was only going to say this at the end of having done the general journal. They can test it. They can test you on this in the general journal. They can test you on this in the general ledger, which they've shown you in the example. They can test you this by doing the closing trial balance. You see. And in any of those sections, they can ask you, no, just do 1, 2, 3 accounts. Don't do it all. All right? A portion of the process. But can you see, if you don't know the process, either way, somewhere along the line, you're going to get stuck, or you're going to perform other things. You see. Yeah, you just need to know this is the type of balance that I should have at the end of the year, and this is what I need to do to close it off. Okay? So it's pretty straightforward. And that's why I was saying by the end of the week we'll be done. Okay, so here, 520. But it's good that you're already seeing how they can ask you this type of question. Okay, so the next step, now we need to deal with the trading account. Okay, and we know that the trading account, we close it off to the profit and loss account. Now, before we can do that,
Sales cost of sales.
yeah, sales minus cost of sales, all right? Now think about this. Sales minus cost of sales. We know that our sales was greater than the 520,000. So therefore, we should have a credit balance in our trading account. Does that make sense? So now what we want to do is we want to close it off to the profit and loss. So we're going to have to debit the trading account. Okay. And you're seeing this, I'm sure you also flipped looking at the general ledger. So you're also seeing in the key account what it's looking like, and it's matching exactly what I'm saying. All right. So here we're saying trading account.
Method marks for showing the calculation.
Yeah, because you see, that's why I'm doing the calculation here, even though you have the answer already there. Because they might just ask you for the general journal. So you wouldn't have had that visual. Does it make sense? So you would have needed to do the calculation here. So in brackets, then you can put, I know our sales was 832.
And then cost of sales 520.
Minus 520.
Which gives you 312.
Okay, which gives you said 312.
Yeah.
Okay, right. And then we know that that gets closed off to the profit and loss. Okay, so can you see now, we've closed off the trading account to the profit and loss. We're done. Now we're now going to the profit and loss account. Well, the next step in your process is nominal account section to the profit and loss. Okay, right. So now, yes, we have, what incomes do we have?
Rent, income, interest on fixed deposit.
Okay, so we could start with either one of those. So let me start with rent income. And how much is your rent income? Okay.
45,500.
Okay, actually, let me write them down first. Let me write them down first. We have rent income, and the other one was?
Interest on fixed deposit.
I put FD there for fixed deposit. Now, can you see? I should have said this before. Remember what I showed you in that same picture? I showed you that the incomes we are debiting, and that's exactly what we've done. Now, what was the balance on the incomes there?
So rent income total balance was 45,500.
Uh-huh.
And then total balance of interest on fixed deposit 6,000.
6,000. Okay, so these guys have done something I don't like, and I'm sure you guys have now picked it up. That I prefer to do each account separately and not to bundle things up. And these guys have decided to bundle things up. It's cool. If you know your story, you'll be fine. All right, but if you are new to accounting, fresh to accounting, it might be like confuse you, like, why are we doing that? And so forth, so forth. So yeah. So here again, this is to the profit. Ooh, that I had shifted. Here, profit and loss account. Oh, woo! My goodness. Where the heck are we?
There. Under the interest on FD.
No, but I mean, as in the cursor. There we go. Okay. So Oh, now I see what's going on. It's the size of the font. Quickly change that. There we go. So we know this is happening in the profit and loss, and so here I'm just showing the calculation so everybody can see how we arrived at that 55. Any day now. Okay. Well, I'm sure you all get the point. All right, there we go. All right, so it's a bit messy now. Let me quickly sort that out. All right. So we've dealt with our incomes. It's now really about just our sorting out now our expenses. Okay. So I've left the total expense there. They've done it right at the beginning, but you could do it at the end. We're debiting, remember the profit and loss account, and we're crediting all our expenses. Okay, so quickly check for me.
Insurance is 14,700.
Okay, let me click in there. I guess I wasn't hoping you would be that quick, but oh well. Is that how much?
14,700.
14,700.
And then the interest on mortgage loan is 72,130.
72,130.
Wages and salaries is 125,680. Telephone is 17,750.
17,750.
Office consumables 3,000.
3,000.
Advertising 9200.
92 double. Oh my goodness.
And then general expenses is 8880.
General expenses 880.
No, 8880.
888. Ah, there we go. All right, so there you can see. Now we've closed off all our nominal account sections. If you add all these up, you'll get the 251,000. All our nominal account section to the profit and loss account. Okay.
Now it's profit and loss account.
Exactly. All right. Again, we're asking ourselves, okay, which one is greater? Okay, we look at the total on our expenses, 250. All right, that's our debit side. Okay, versus, okay, we've only got 51,000. But remember, again, we still have this gross profit. All right, that's 312. Okay, so if we can even quickly do the math in our head, that's probably 360 something thousand minus the 200. So obviously we made a profit, is what I'm saying. So then we say to ourselves, okay, cool. So we know that the profit and loss increases on the credit side, decreases on the debit side. Okay. So then, yes, we're going to then debit our profit and loss account, all right, to close it off to the capital account. Okay. So here you can quickly write the calculation in.
Is that just, it would basically be the debit side minus the credit side?
Exactly. All right. In the general ledger, it's actually easier to do this.
You can see it.
You can see all this happening. In the general journal, however, you have to understand the theory of what you're doing and also understand what are the balances. Okay? What are the typical balances for the accounts that you're working with? Okay, and then we know the total expense was 251, I think it was. How much?
I got 251, 340.
340. Okay. All right. So then the total that you're going to get there is how much? What's the total that you get there? Maybe was you guys calculated. I'm just going to put capital over here because we know we're closing it off to the capital account. Okay. And what is the total you guys got there?
112,160.
112,160. Okay, and we're doing the exact same on the credit side. So can you see why this is my favorite unit? Because now we're finally looking at profit, which is why we do accounting, to see how much have we made. You know, is this business profitable? Is it making money? Okay, so now our second last thing that we need to do is to then close off capital to the, close off drawings to the capital account. And we know that drawings is always getting debited throughout the year. So now we have to credit it, okay? So here we go to the credit side. Now I know a lot of my students are like, okay, this is easy. Looks easy, but we're doing it together.
Yeah, it's different
when you sit by yourself, you'd be like, yo, but drawings. During the year, what actually happens with drawings? So please, take the time to practice this thing.
So why did we debit the profit of the capital?
Wait. Why did we debit it? We debited it because remember, our credit side was greater than our debit side. So the shortfall was on the debit side. Can you see that? And we were closing off. Remember, we want to bring also the profit and loss account to zero. So what we're saying is, we know that on the credit side, the amount is greater by 112, 160. But we want to bring it to zero. So what we're going to do is, we're going to debit by that exact same amount so as to bring the profit and loss to zero. Does it make sense? So if you look at it, let me show you your profit and loss in the general ledger. If you look through the example, you'll see they also have the profit and loss. Right here. Can you see? So for a second, just imagine that's logic. You have your income here, you have your expenses here. Okay, so you know, okay, all right, I've made a profit of 112. All right. So now, if I want my debit equal my credit, that's bringing my account to zero. Makes sense now. Exactly. Okay. Awesome stuff. Right. So drawings. What was the balance on drawings? 18. 42. So again. I have such a great time lecturing this because, like I said, I love this. And then when I have to sit and mark, I'm so shocked because I'm like, but I thought we all understood. So I really have just come to realize that students just are not practicing. You know, it really is that. You see. So remember, look at the process again that I gave you. I said your post-closing trial balance is your new capital balance plus all your assets and liabilities.
For this specifically, because I can't find it here.
Yeah.
They give us this, like those numbers. We don't have
No, they won't. They don't have to.
But how do you find out, like land and buildings, how do you find that out?
You would have to go to the trial balance, the pre-closing trial balance. So in other words, if you look at, I don't know if they have, let me see. In this textbook, do they have it? Yes, they do. Example 9.1, you'll see there. Can you see there we have land and buildings 540? So they'll, exactly. So that's now, can you see? They could have just given you this trial balance and not given you the general ledger. And that's typically how they do it. they'll give you the trial balance before year-end procedures, because you then need to do the
Or
year-end
do
procedures.
okay.
Can you see?
And then when we do the B section, then we start doing the accrued stuff as well.
Yeah, that's where you then do the accrued. Oh, you hungry for that, eh?
Yo, I studied so hard for that section. Oh.
Okay, so now, we now need the new balance for capital. So what we then need to do is we need to go to this pre-closing trial balance, all right? And we need to say, what was the old capital balance? It was this 163. 163.70, okay? But then we know that we had a profit. So profit is going to increase your capital, all right? If it was a loss, we were going to subtract it from the old capital balance. So there we had a profit of 112,000, how much? 160. Okay, and then we also know that we had drawings. So now we need to deduct the drawings. So we know drawings reduces our owner's equity or our capital in the business. Okay, so we minus the 42,000. That then should give us our new capital balance. And if you look, oh, sorry. Thank you for that. So let's quickly see here. If you look now at the end of the steps, can you see when they said owner's equity, the new formula that I was telling you about? It's your capital plus your profit minus your draw. Okay, which will then give us, we know that this will obviously give us a, and we know that capital is it increases on the credit side. And you can see we still have a positive balance, so it should still be a credit balance at the end of the day. Okay, so it's actually increased. It should be about 200 and something thousand, right?
233,430.
430. Okay. And now, guys, you're done. Because land and buildings, equipment, fixed deposit bank, everything else that we get in the balance sheet section of your trial balance is the exact same balance. It hasn't changed. So this is why I love when they tell you just do the post-closing trial balance. Because it shows me, what do my students really know? Do they really know this? Do they really understand this? Because then you will do it. It's saying, okay, cool. Let me calculate profit, because I know that I need to calculate profit in order to get my new capital balance. This is the only work that you need to do if they ask you for the post-closing trial balance. Your new capital balance, once you have your new capital balance, it's copy and paste all the way through. Do you get that? For the balance sheet section. And then there's no nominal account section. All right? The other thing that you need to adjust in the balance sheet section for your post-closing trial balance is there's no drawings. It's been, exactly, it's been closed off to the capital account. You see?
That equipment, why is it also 540,000? Because here it says that it's $3.
Nah, so I probably made a mistake. Okay. Just hold up a second.
And then doing the debit credit line is supposed to be quick. What you're saying.